Janet Johnston is the PM at TrimTab Funds. Our own Tom White will be joining us in just a sec to talk some trading. Janet, good to have you back. So tell me, as a portfolio manager, how you want to be positioned as we get to this kind of a big event, of course, we've been waiting for counting, about like 7 months now?
Well, I think the bigger event is earnings, slightly stronger GDP than expected. And actually, if you look at the underlying numbers, the U.S. consumer continues to be really strong. Consumer spending is running at an annual rate of 4.3%, which is a very strong number. The slowdown that we've seen in the economy was due to manufacturers drawing down inventory in face of the global slowdown, but what we're seeing in the U.S. is that profits continue to be strong. 43% of S&P 500 companies have beat their numbers. 78% have had positive surprises, where sometimes we know companies manage their earnings. We're sometimes skeptical, but we believe that underlying profits, especially ones that are driven by the U.S. consumer, continue to be very strong.
So just because we're getting lower rates doesn't mean that you're going to be piling into all the growth stocks you can get your hands on then. What are the sort of most important characteristics you're looking for in companies right now?
Well, we look for high-quality companies with strong free cash flow growth, strong balance sheets. We also look for other corporate modes, such as innovative or disruptive technology, brand awareness, market positioning. One thing we have noticed in this environment is that the larger companies in this trade war environment have more negotiating leverage, and they're also faster at adapting. We're seeing trade diversion out of China into other countries in Southeast Asia, Mexico, and we just think some of the bigger companies with better market positioning are better at adapting.
I see some very consumer-centric companies in your fund. I also see that as the last time I looked at the data, Illumina was a big holding there. Obviously, we just went through pretty rough earnings for that company. Tell me what you think about what you saw from the numbers, or whether or not you're still in the stock, Janet, because I know there's a lot of folks that have been riding that thing to a big gain over the past couple of years that now maybe looks like it's in question.
We continue to hold Illumina. Their core business continues to be strong. They're also somewhat of a pure play in genetic sequencing, and it's a stock that we think has some corporate moats, and we're going to continue to hold over the long term.
Okay, now...
And they pre-announced, I think it was a revenue shortfall. We are looking to see their full earnings numbers.
Okay. All right. So that aside, as I mentioned, some other consumer names in there. The data we saw from the GDP prints says people are spending like crazy, Janet. What do you see as some of the best ways to take advantage of that within your holdings?
Well, we just think the U.S. consumer continues to be really strong. It's a sector that we are underweight in. We like companies with strong global brands. We actually own some companies that not only do they have strong growth in the U.S., but they actually have double-digit growth with the Chinese consumer. If you look at Starbucks, their business in China was gangbusters last quarter.
Yeah.
That said, we own Nike, we own Lululemon, we own Estee Lauder. In our international portfolio, we own Adidas, we own Kering, which is Gucci, some high-end fashion houses. But the Chinese consumer has been very solid. We'll see if that changes. So far, we have not seen that. And the U.S. consumer, I think Jamie Dimon, when they did their quarterly earnings report, really said that the U.S. consumer was robust and really helped fill the gap where other businesses were slower.
Yeah. Janet, one last point on the tech side. I see Microsoft as being one of your top 10 holdings. Within technology, what sort of exposure do you want? Do you want the bigger kind of, combinations of cloud plus consumer that Microsoft offers? I know you and I used to talk a good bit about NVIDIA. I don't see that in the top 10. Tell me what within tech is most appealing to you.
We still own NVIDIA. We like companies that have a strong position within their market. Obviously, Microsoft and Amazon are the largest providers of cloud services to Fortune 500 companies. We like companies with strong free cash flow growth, strong balance sheets, and many of these large cap tech names fit the bill. So we're not a cap weighted fund, we're an equally weighted fund, but we still own many of these names in our portfolios.
All right, good conversation as always, Janet. We're going to talk about some of the trading in these companies. Janet Johnston, portfolio manager at TrimTab Funds. Tom White is with us.
Thank you so much, Oliver.
Thank you, Janet.